Hi everyone, Bapak Crypto here, your crypto educator who would like to help you make an informed decision when trading and investing in digital asset. Are you tired of buying the dip? Does your trading bot stops giving you profit like it used to? Are you waiting for the bull run so you can start earning again? In this video, I will share with you one method where you can earn profit regardless of market condition by trading perpetual futures. I will share with you what is perpetual futures, the benefits that comes with it, as well as the risk that comes with trading perpetual futures. Last but not least, I will do a live demo trading of perpetual futures right in front of your eyes. So stick around. What is perpetual future? Perpetual future is a financial contract between two parties to transact an asset at a predetermined size and price in the future. Let us unpack it with an example. Two parties. For the two parties, one is typically the client and the other is the broker. And the place where the trade is executed is called an exchange. Example of brokers are JP Morgan, Goldman Sachs, and UBS. Examples of exchanges are CME or Chicago Mercantile Exchange, LSE, London Stock Exchange, and for my viewer in Singapore, SGX, Singapore Exchange. In crypto, however, exchanges such as FTX, Gemini, and Binance also act as a broker. So, exchange and broker. In traditional finance, exchange and broker are different. This carries a risk, whereby when the exchange is hacked or maybe having a server issue, the client's trade might be cancelled or not executed. This is why institutional clients prefer to trade in an established exchange such as CME, because even in the unlikely event that their broker is hacked or having server issue, they are still liable to settle the trade as long as it is executed in CME. In our example, let us say you go to ftx.com to trade perpetual future. So the party is you and FTX. Transact an asset. Asset, or the underlying, can be stocks, bonds, commodities, index, or even cryptocurrencies. In our example, let us use Bitcoin as an example. You, as the client, have the choice to either buy a perpetual futures or sell a perpetual futures. When you buy a perpetual futures, you expect the price to go up. When you sell a perpetual futures, you expect the price to go down. Let us use an example where you, with your exceptional technical analysis skill, decided that Bitcoin price is trending down. So you sell Bitcoin perpetual futures. Size. Size is how much of the asset that you want to trade. For our example, let us use 1 Bitcoin. Price. While the price of the underlying asset is moving all the time, when you buy or sell a perpetual futures, you need to set a predetermined price, which is called the strike price. This strike price is the most important decision that you need to make when opening a perpetual futures position, because the profit and loss of your trade is determined by it. When you buy a perpetual futures, the profit or loss calculation is the current market price minus the strike price times the size of the trade. When you sell a perpetual futures, the calculation for the profit or loss is strike price minus current market price times the size of the trade. If the resulting number is positive, that means it's a profit. If the resulting number is negative, means it's a loss. For our example, let's say you notice that Bitcoin price has been oscillating between 42,000 to 44,000 US dollar. So you decided to choose the strike price as 43,000. Since you are selling the perpetual future, you are expecting the price to go down. Let's say You are spot on. The price of Bitcoin goes down to $42,000. That means the profit or loss is the strike price, which is $43,000, minus the current market price, which is $42,000, times the trade size, which is 1. The resulting number is positive 1,000. That means you make a profit of 1,000 US dollar. Yay! However, in the unfortunate event that the price of Bitcoin goes up to 44,000, your profit or loss calculation is 43,000 US dollar minus 44,000 US dollars times 1, which is a negative 1,000 US dollar. So you are making a loss. Future. Since the price of the underlying constantly change, the profit and loss is not realized until the future expires. For in traditional future, there is a predetermined expiry date, such as 1 month, 3 months, 6 months, or even 1 year. In perpetual futures, however, there is no set expiry date, so the future can last indefinitely. The client needs to determine when the future position is closed, at which point the profit or loss will be calculated. They can determine by setting a trigger price or manually close the future position in the exchange they are trading in. So, in one extreme, the client can close the position within seconds from when the position is open. In the other extreme, the client can choose to keep the position indefinitely for as long as he or she wants. Before we move on to the benefit and risk of perpetual future, I have prepared one question to help you check your understanding of the concept that I have shared. Knowledge check! You go to Binance.com to trade Ethereum perpetual futures. You choose to buy a perpetual future of 5 Ethereum at the strike price of USDT 3,200. The price goes up to USDT 3,400. Please count how much you profit or loss. I will give you time to think. Have you had your answer? Let us see the answer together. Since you are the buyer, the profit or loss calculation is current market price minus strike price times trade size, which is USDT 3,400 minus 3,200 times 5, which equals to 10,000 USDT. Do you get the right answer? Congratulations! As you notice, I use USDT for the price. This is referring to USD Tether. USD Tether is a stable coin that supposedly backed by a basket of investment that track the price of US dollar. Many people question this validity, but this is outside of the scope of this video. This calculation that I share with you to count the profit and loss is based on the quoted price. So, the amount that you will receive or pay is in the currency that the price is quoted as. So, if it is quoted as US dollar, you will receive or pay US dollar. If it's quoted in Tether, you will pay or receive Tether. The same goes if the price is quoted in maybe sterling, euro, or even Sing dollar. The amount that you will receive or pay is in the currency of the quoted price. There are two main benefits of trading perpetual future. The first benefit is earning profit regardless of market condition. And that's the reason why you watch this video, isn't it? If your only strategy is to buy low and sell high, then you will have an issue during the bear market. Not only that you are stuck with a bag of coins that you buy during the high period, you are also in constant dilemma whether to buy the coin now because you don't know whether now is the bottom of the dip. With perpetual future, you do not actually buy or sell the underlying asset, so you will not end up with a bag of coin that you cannot sell. If you think that the price of a coin is trending upward, you can buy the future of the coin. If you think the price of the coin is trending downward, you can sell the future of a coin. No actual exchange of that coin, only the profit and loss when the position is closed. The second benefit of trading perpetual future is hedging. Hedging is a risk management strategy where you offset the potential loss by buying the opposite direction of the related asset. Let's say you believe in the potential of coin X. You have done the fundamental analysis. You are looking to invest in coin X for the long term. Hence, you buy a quantity of coin X. At the same time, for hedging, you can sell the future of coin X. So when the price of coin X goes down, the loss of the value of coin X that you hold will be covered by the profit from the future. On the other hand, when the price of coin X goes up, the loss from the future position is covered by the increase in value of coin X. The main risk of trading perpetual future is over leveraging. Leveraging allows you to trade more than what your capital allows. For example, you can have up to 100 times leverage when you trade perpetual futures in Binance.com. So let's say in your Binance.com account, you have 500 US dollar. You can trade as if you have 50,000 US dollar. Amazing, right? So if the current Bitcoin price is 43,000 US dollar, you can trade a size of 1 Bitcoin. Without leveraging, you need to have at least 43,000 US dollar to place a trade size of 1 Bitcoin. But since you have 100 times leverage, you can place 1 Bitcoin worth of trade with $500. Now, you buy futures of 1 Bitcoin. If the price of Bitcoin increased from $43,000 to $43,500, you earn $500, double your account size. However, keep in mind, this is a double-edged sword. So if the price of Bitcoin dropped from 43,000 to 42,500, your entire account of $500 will be liquidated and you left with nothing. I will now do a live demo of a perpetual future trade to help you understand what I have shared better. I will use ftx.com for this demo, but just bear in mind that even though different exchanges have their own user interface, the steps required when placing a perpetual future trades is identical. So let's go through it. Okay, now I'm in ftx.com. So for our example, let's trade Bitcoin perpetual future. The first step is you type the ticker symbol, which is BTC perp. This is the ticker symbol for Bitcoin perpetual futures. And you click on it. The chart of Bitcoin perpetual futures is given. Just an info, the chart of Bitcoin perpetual futures track the price of Bitcoin, but there might be slight difference in the current market price. Just to take note, it's not exactly identical 100%, but it tracks the movement of Bitcoin. As you can see, seems like Bitcoin is trending downwards. I'm looking at a 1 hour time frame. You can look at a 4 hour time frame. You can look at the 1 day time frame as well. Okay, for the purpose of my example, since my video is making money even during the bear market, let's say we want to sell Bitcoin perpetual futures. How I do it? I go here. There's this tab of buy Bitcoin perpetual future or sell Bitcoin perpetual future. So I will sell Bitcoin perpetual future. Now there are a few order type. I will not go through all this type of order in this video, but on upcoming video, I will share with you more in depth on all the different order. For the purpose of this video, I will use a market order. Market order means your order will straight away be executed at the best price, the next best price. So because if you put other type of order, it needs to be triggered when that price is reached. But for market order, it will be automatically executed at the next available price. Now what you decide is the amount. Let's say one Bitcoin is 42,000. You can set up the maximum account leverage here. Let's use 20 times for this example. I have around $500. That means times 20, I can trade worth of up to 10,000. Okay, that's why here I try to trade one Bitcoin. They say the size too large because the value is of this trade is 42,000. So let's use a smaller amount, 0.001. Yes, the value is $42. Very small. Now, what you need to do is just to click sell. Tang. Then the order placed and order is executed. If order not executed yet, they will be here under open orders. But since we are doing a market order trade, it's straight away executed. And here you see the current position, short of 0.001 Bitcoin. This is the size. This is the open price. So this is the price where the trade is executed. And currently the price is 42,567. So actually the price is going down. I'm earning but I think because it's too small, they put the P&L or profit and loss still at 0. And if you see the chart, they put here my entry point at this particular bar. So I enter here. The mark price will change. I suggest you do not look at the mark price because the update is rather slow, but the P&L is accurate. They update live for FTX from my experience, and you can see my P&L 0.02 because the current mark price is 42,562, and you can see it's oscillating there 561, 560. That is why I'm earning money from this position. I can keep it as long as I want, but for the purpose of this demo, I will close it. It'll be closed at the market price. They will give you a warning. Are you sure you want to close your BTC per position? This will send a reduce only market buy order for 0.00. Basically what it's trying to say is I'm doing a short position, which means I sell the futures. The system will create a buy position at market price to close it off. If I click yes, that's it. It's closed. So that's the simplest way for you to trade Bitcoin perpetual futures. That's all the sharing that I have for today. I hope you find it useful and informative. If you do, please click the like button and subscribe to my channel and put on the notification bell, because in the future I will share with you more detailed video on perpetual futures trading, which includes other order types like limit order, stop loss, and take profit order. So until next time, keep on learning crypto.